Hey guys, how's it going? I'm Lewis Harding Investor and welcome back to my channel. And in today's video, I'm going to be analysing Polymetal stock. I'm going to be using fundamental analysis to see if the company is worth buying or not. I'll be then using a DCF valuation to determine the fair value of their stock. Let's get straight into it. So who are Polymetal? So Polymetal International plc is an Anglo-Russian precious metals mining company registered in Jersey but is listed on the London Stock Exchange and the Moscow Exchange. It is also a constituent of the FTSE 100 index for now. The history of the group. So Polymetal group of companies was founded in 1998 in St. Petersburg, Russia. And what do they do? They mainly mine precious metals such as gold and platinum. And yeah, they have a lot of mines in Russia and Kazakhstan. Yeah, the company itself is listed on the London Stock Exchange, part of the FTSE 100 index, but that might be changing due to the sanctions on Russia. There's quite a few companies listed on London which are currently being delisted / removed from the index, so we will see what happens with that. Now let's have a look at the sales per business for Polymetal, and we will start with 2020 figures. So Kazakhstan makes up 33%, and the rest of the sales on there are all regions of Russia. I'm not going to try and pronounce them because I will mess that up completely, but you can see about a third of the sales come from Kazakhstan and the rest come from Russia. Sales per region, so yeah, you can see similarly Russian Federation makes up 42% of sales, Kazakhstan 33%, and then the rest of them is made up of Asia and Europe. Now let's take a look at the free cash flow figures, and this is taken from Yahoo Finance. So unfortunately we only have 3 years worth of data here, but having a look at the free cash flow, one of the most important things when it comes to a business. 2018 we had about 169 million US dollars, and then 2019 $260 million. Then in 2020 we had 609 million US dollars. So you can see this has increased year on year. 2020 is clearly an anomaly, a blockbuster year due to commodity prices being higher, which means Polymetal's free cash flows are higher. Trailing 12 months 2021 has been good as well. I'm surprised these figures haven't been updated yet, given it's nearly 3 months after their year end. Maybe it takes a bit of time for Yahoo Finance to update, but it will be interesting to see what free cash flow they do have at year end 2021. Now let's take a look at the key financial ratios for Polymetal, and these have come from macro trends. We'll start with the current ratio. So a lot of liquidity going on with the business. I like to see current ratio above 1, so all the current assets can pay for the current liabilities, but we've got over double the current assets than current liabilities, which is awesome. Long-term debt to capital, not too shabby, below the 50% mark, which I like. Maybe you want a bit better for a mining company, given the risks involved with commodity prices, etc. But then again, it's not too bad, is it really? Gross margins looking solid, 2020 clearly better than the past 5 years. Makes sense, had a good year due to commodity prices being higher. Doubt we can make that continue, but it's a good year nevertheless. Net profit margin as well, when you go down and have a look, absolutely smashed it. But yeah, it's clearly an anomaly looking at the previous year, so you truly cannot expect that going forward, just not realistic at all. But then yeah, look at return on equity as well, a figure I really like to see as high as possible. Anything above 15-20% is classed as very good. So yeah, Polymetal do some decent stuff here in terms of return on equity. Yeah, pretty solid. Now let's have a look at the genuine impact stats for Polymetal, and we'll start with the quality metric. And yeah, it's currently showing low for the quality metric, quite a low ranking as well. Profitability is showing high, financial strength weak, capital allocation poor. So basically profitability is sound and everything else is a bit rubbish. I'm not sure if I totally agree with that, but maybe there is good reasoning behind it. Value metric, this is where it gets very interesting. We'll get onto why the stock is very cheap later on in the video, but as you can see, it's one of the cheapest stocks on the platform. Ranks number 13 for cash flow, so very cheap at the minute for what cash flows and what they've got going on financially. Now I'm taking a look at the growth in the bottom left-hand corner. Revenue, earnings per share, dividend, free cash flow, all ranking high, likely due to the blockbuster 2020 year. Then if we have a look at the value overall, it's showing a ranking of 76, so currently showing one of the best value stocks on the Gradient Impact platform. So yeah, interesting stuff. Now let's have a look at my analysis checklist for Polymetal International, and let's have a look. So currently the market cap of the business is 737 million, current price of £1.20, it's actually £1.25 per share in the UK. This is a little bit out of date. Well, it's out of date because the stock's going absolutely crazy up and down all the time in a minute, which we will get into. But more importantly, yeah, you can see the PE ratio is 1 and the earnings yield is 93%. So yeah, valuation wise, it's looking extremely cheap. And there's a good reason for that. Anyway, onto the analysis, and profitable, high returns on capital using low leverage. So this is my first pillar, let's say. Gross margins, 5-year average 47%, very solid. I like to see above 40% in general. Net margins, 5-year average of 25% rounded up, so solid. Maybe with 2020 figures will make these figures here look a bit better, but it is what it is. Return on equity, 5-year average 35%. Once again, very, very solid. I like to see above 15%, so you can't knock them really. Long-term debt to equity is below the 50%, like I mentioned earlier on in the video, which is solid. Maybe want a bit less for a mining company, but it's more than manageable. Current ratio above 1, 2.2, smashes this out of the park. Proven ability to grow, so on to the next bit now, and yeah, all in the green, showing good growth across the sales, the profit, shareholder equity, so the book value is going up, and then the free cash flow is going up as well. Take it with a pinch of salt because this is all due to 2020 figures being good, so this does skew this pillar a little bit. Onto the capital allocation pillar, and yeah, so we'll start with the long-term debt, and this has actually gone up over the past 5 years, which isn't too good. Yeah, you want this figure going down over time, not going up. Dividend growth always there, which is solid. They're growing a dividend over time as we increase their profits. Yeah, you just want them to get that debt down really, don't you? You don't want them to have issuing debt whilst they're still paying dividends. That's my opinion anyway. Decrease in share count, they've actually increased the shares by a little bit, but not too much really, and not too concerning in the grand scheme of things. Probably did this for some sort of acquisition, which rolling into acquisitions, I couldn't really see any. I can't see what benefit the acquisitions have had. Likely going to be acquiring gold and platinum mines. If you know more about this company, Polymetal, and requisitions, drop a comment and let me know what they are, and let me know if they've improved the business or not. I haven't done enough deep dive research into them. But anyway, yeah, it's been out a quality score of 77%, which is solid. You can see in the red is only them 3 capital allocation figures. But then yeah, it gets juicy. Buy at a fair price. Currently a P ratio of 1, price to free cash flow ratio of 2. Very, very cheap based on fundamentals / valuation. Yeah, DCF Valuation for a 10% return, which we will get onto. Share price of £15. So from the current share price on here, 860 gain to my assumed fair value. Yeah, what can I say? Yeah, this stock has been absolutely battered since the Russian-Ukraine conflict. As most of you will know, Russian stocks have absolutely collapsed, most of them dropping 80-90%, losing majority of their value due to this conflict, due to the sanctions, etc. Likelihood a lot of these businesses won't be able to do business, and they will struggle massively the longer this goes on for. Polymetal is no different. As we saw earlier in the video, the majority of the sales come from the Russian Federation, be it from mines in Russia, and then selling to the Russian government, basically selling gold to the Russian central bank. So Polymetal is at a massive risk, and that is why it's trading at such a low valuation. Pre-Russia-Ukraine conflict, I did a video on this company, and solid, let's be honest, absolutely solid financials. Something like this you cannot predict. You can't predict another country going to war with someone else, can you really? So this just shows these risks outside of the fundamentals that you do need to start considering when investing in all stocks. Something like this, if you had a big portion of the portfolio in Polymetal, you've lost a lot of capital. So yeah, it is interesting. But yeah, let's move on to my DCF and how I got to my figure of £15 per share. Now let's have a look at my DCF valuation for Polymetal International, and yeah, disclaimer, this was pre-Russia-Ukraine conflict numbers. The free cash flow figures going into the future are totally unpredictable now due to the conflict, and it's foreseen to see if this company can actually produce free cash flows as it stands. But yeah, I've gone with my figures pre-conflict to show what the business, probably was worth pre-conflict. 10% return, free cash flow estimates from marketscreener.com, spitting out a share price of £15 per share, pretty solid. Consistent free cash flows, even though 2020 figures are, higher than previously. If it can maintain a decent figure, if gold and platinum stays high, they likely will do. But then, yeah, we need to, what's the elephant in the room? Russia, Ukraine, Russia sanctions. Basically, as it stands, I don't think this is an investable business personally. I will get onto that after this, but yeah, there's just so much uncertainty with it. And if you don't know what the free cash flows are going into the future, you don't know if the business is going to be around, then to me, it's just not an investable proposition. But if you are very risky and you think, this is a true deep value play, then by all means go for it. You're doing it at your own risk and your own permanent loss of capital. So yeah, all credit to you if you're interested and if you're still holding on to Polymetal, but it's looking bleak, let's just say that. But yeah, the cheapest valuations in the world at the minute, for good reason. But yeah, it could be an interesting one if the business doesn't go bust. So what are my thoughts on Polymetal? So yeah, let's have a look at the business itself to start with. Pre-Russia-Ukraine conflict, looking at the financial figures, I did a video on this in November 2021, and I personally thought half decent business, solid financials in terms of profitability, returns on capital, decent amount of, manageable amount of debt. In terms of growth, solid 2020, commodity prices stay high, Polymetal does well. Capital allocation, not too bad, solid dividend, and even in November time, it was showing a decent valuation, like many other miners such as Rio Tinto and BHP. But yeah, what's happened in 2022, February, Russia invades Ukraine, Russian stocks drop 80-90% within a couple of weeks period. Polymetal was no different, same thing happened, and yeah, it's currently trading at like £1.25 per share when it was up at like £15 a share, probably like a year ago or whatever. What can I say? I personally think the permanent loss of capital, the risk of permanent loss of capital is so high that it just makes it an uninvestable proposition in my opinion. I don't think these guys would be invested in Polymetal, and you've got to think to yourself, are you trying to be a bit too clever by investing into this company now? Just really think about it. Like, the valuation is very cheap, but there's a good reason why. If this conflict goes on for years, Polymetal will not have a business anymore. There will be mines there, but the business itself will be screwed. I believe their debt is not in rubles either, so they've got to pay the debt in other currencies. So if one of the main suppliers of gold and silver and platinum, whatever, is the Russian government, they need to find new customers straight away, be it India or China or someone, to start buying the gold from them. But even then, with sanctions going on in Russia, getting the gold out of Russia will be really difficult. So yeah, I personally think it's one to stay away from. Just be very careful with it. If you're in Polymetal, sorry, you've just been very unlucky. These things do happen. Stocks can collapse due to non-fundamental reasons. But yeah, it does make you a bit more wary investing in countries like Russia, but it kind of is what it is at the end of the day. So there we have it. That was my stock analysis of Polymetal. If you enjoyed today's video, then please subscribe to the channel. Thank you very much for watching. I will see you next time.
Thank you for watching. As always, it would be amazing if you could like, comment and subscribe to the channel if you enjoyed this video. I will see you in the next one. However, you can check out some of these videos.